Hey guys, it's Aman
And Christina
from Our Rich Journey. Today we're going to give you 5 tips to get started investing in the stock market. We're also going to share our investment plan to achieve financial independence.
Tip number 1 is don't purchase individual stocks. You can do that later when you're more comfortable in investing, but when you begin, you don't want to do individual stocks. And the reason for this is because it's a bit of an emotional roller coaster ride. Things go really well and you purchase more stocks and then it drops and you want to sell. It's just better not to purchase individual stocks when you first begin investing. So let's give an example of the emotional roller coaster ride of a specific stock, and we'll use Facebook as an example. Let's look at this chart, which shows Facebook in red and the S&P 500 in green. Now, if you look at Facebook, the stock dropped dramatically, 20%, and then it goes rising up and down really fast. There are a lot of ups and downs with Facebook.
Now compare that to the green line, which is the S&P 500. As you can see, the volatility is minimal. It goes up and down, but it has a steady rise. But in addition to the emotional roller coaster of buying individual stocks, there's also quite a bit of knowledge that's involved in picking individual stocks. So just starting out, we don't recommend buying individual stocks. So we say don't invest in individual stocks. So then what are you supposed to be investing in? We recommend low-cost index funds. And let's show you an example of the power of this.
So look at this chart. If you invest in an index fund that tracks the S&P 500 in 2008, that was towards the peak of the stock market. But then you see there's a huge drop in 2009. But if you kept your money in, even following the drop, up until current date in 2018, you'll see that you would have made an 85% increase in profit.
So index fund investing can be very powerful, and it's a lot less stressful for someone that's starting out. I mean, individual stocks, you'll get to that point, but starting out, index funds are a powerful way to get started.
Tip number 2 is don't create an investment plan that's too complicated.
Oh yeah, I love this one because people tend to think investing is a very complicated process, when in fact it's not. Your investment plan should actually be very simple.
So let's take our investment plan as an example. Our investment plan is super simple.
With our plan, we do 4 things. We maximize our 401k plan, we max out our tax advantage investment accounts, invest extra money in low index mutual funds, and when we can, we buy real estate. So we go into more detail in some of our investment videos, like how to become a millionaire and the Money Minute videos, but that's basically our plan. It's super simple.
Okay, so tip number 3 ties into tip number 1 and number 2. First, we said don't invest in individual stocks, and then also keep a very simple plan. So tip number 3 is you don't need a financial advisor to do these things. So financial advisors will charge fees because they're trying to help you decide which stocks that you should select and what you should have in your investment portfolio.
But if you're investing in index funds and you have a simple plan, you don't need a financial advisor to tell you what to do. Let's take a look at the Vanguard site for a great illustration of how fees impact your investments. In this example, you've invested $100,000. The investment earns 6% a year for the next 25 years. And with no costs and no fees, that investment grows to $430,000.
But on the other hand, if you pay a 2% fee to your financial advisor, that same investment would only be worth $260,000 after 25 years.
So 2% doesn't seem like a lot of money, but over the life of your investments, in Vanguard's example, it takes 40% of your growth. So tip number 4 is automate your investments. I really like this because anything to make life easier works for us. By automating your investments, that means you're automatically putting money into the market at the same time of the month. Sometimes you can set it up to do weekly, bi-weekly, monthly. It's really up to you. But what's most important is that you're consistently putting money into the market.
And our final 5th tip is to continue learning about investments and to improve your financial literacy.
Yeah, see, this is really powerful because most people tend to wait until they feel like they know enough to start investing. But you don't have to necessarily wait that long. You can learn as you go. And by investing in index funds and simplifying your investment process, it will give you time to learn. It's a really low-risk way to get started investing.
That's right. It's very important that you become financially literate, especially if you're not using a financial advisor. You want to make sure that you're doing your own research and that you become educated on the topic.
So those are our 5 tips. But what's most important is that you take action. Turn off this YouTube channel right now. Go out and get started if you haven't already.
Okay, but before you do, if you like this video, make sure you give us a thumbs up, subscribe to our channel, and join the journey.